Well, hi everybody. It's Forecast Shear here reporting in. We're into a new year now, and today is Saturday evening, February the 7th, 2015. Thank you for joining us. And we're looking forward to just talking about kind of what's going on in the world right now and what we see going forward into 2015. Today's segment will be talking about oil prices, one of our favorite topics, peak oil, oil futures, and as it pertains to the world. You know, petroleum is an important kind of liquid fuel, and energy is important because it's what modern society moves on. And without energy, basically we're stuck, and our productivity as human beings becomes lower, and our quality of life will become a lot lower. So we can live without oil, but it will impact our quality of life and our society, and also our productivity, our ability to get stuff done as human beings in a dramatic way. We saw last year, 2014, prices a little above sustained, stable for the last few years, around $100 a barrel. These are some 5-year plots over here on WTI and also crude, and we see pretty clearly they're hovering around $100. Some were more up to 120, 110, and some a little bit less. That was kind of the ballpark numbers that we saw for several years. You will remember around the economic disaster that we had in 2008 that we had I don't know if you remember this, gas went it went up crazy high. There was a forecaster that worked for Goldman Sachs and said gold could go to 150 a barrel, and it just about did after he made that prediction, that forecast. It went up to 147. You see that big chart, this big spike, and so that was a big spike. And people were investing and buying, and the economy was getting better and better and better, and oil was going up and up and up. People were consuming it like crazy. But also, there were people in the developing world that started consuming oil. There were more takers. And so demand went way up, generally speaking, in most parts of the world, as kind of slowed down here in the developed world, in the red line. But the blue line, kind of the developing countries, were really just consuming oil like crazy. And for new uses, buying cars, opening factories, but everyone was running around trying to find oil, and it was about flat. They were not able to get significantly more oil. So we're stuck with kind of fixed capacity as far as global oil production. The top part here that's not shown is really, in addition to the liquid petroleum, is kind of like shale-based petroleum or synthetic fuels and things like that. So if you add that in, it's gone up overall a little bit, but not a whole lot. It's still fairly fixed in the big scheme of things, whereas demand went way up, pushing prices up. And then there was a big slowdown in the economy, and demand plunged, and the price went down, lo and behold. So many people say, really, there's a conspiracy to have something to do with, Saudi Arabia and Russia and OPEC and all this business, and that's the why. And they all got together and they wanted to run U.S. domestic oil producers out of business, knowing that their cost of production was around $100 a barrel or something in that neighborhood. And they just get it down, and also for Russia, that they could, put pressure on Russia economically to do things that the West wanted. Maybe that's true. But I think really what I'm hearing is that the demand dried up as the economy slowed down a lot at the end of 2014. And a lot of factories in China are idle or slow at lower capacity. Consumer spending dramatically lower. People are trying to save money and drive their cars less. That lower demand is what's a big part of moving the cost lower. People are trying to conserve money and not spend as much gas. So that's really what's going on there. Now, when we have the other things that we're looking at, we saw a big plunge and then a small recovery during the financial disaster around 2008. Remember that terrible disaster? Look at this. And I'm kind of wondering if this this similar plunge that we're seeing, where we go from 100 something down to $40. Well, that's about the plunge that we had recently. I mean, it's an incredible historical parallel here. I'm kind of thinking maybe this will be foretelling another financial cataclysm. Basically, that it's an indicator that the economy is not doing good. That's why people are not burning as much oil. There's just no takers. And then we can expect an economic problem, a big one. It's an early warning indicator of that. And I think that's what we're seeing right here. Basically, there's not many takers on the oil, and then we see this big plunge in oil prices because there's just no takers, and then financial crisis. And then some sort of, you can say what you want about the so-called remedy. I don't think the problem's been fixed. I think it's been papered over for a bigger financial calamity that we're about to face imminently. And so, who knows what the response to that's going to be. But as far as oil prices go, it's hard to say they're going to go much lower than the $50 they've apparently leveled out at. It looks like it's found support around $50 a barrel here and started to climb back up. I don't think it's going to go much lower than $50 for the year. The EIA estimates, let's talk about what they predict. Wall Street Journal had an article. Here it is. EIA global supply to outpace demand. Guess what? Supply is going to come offline here from a lot of people that need $100 or in that neighborhood, $80 or $90 just to break even as their cost of production. And they're going to be forced to gradually take production offline. That's going to dry up supply right there, and there's going to be a leveling out effect here. So I think this is very conservative, saying that it's going to average $57 a barrel in 2015 and 75, and I think we're going to go back to 75 to 100 by the end of the year or sooner, maybe by summertime. People are just going to have to take stuff offline. Again, cost of production, it really can't go lower than cost of production. Otherwise, they have to start taking production offline and just wait for it to pick up. Okay, they can't afford to produce at a loss for very long. A lot of them, again, a break-even cost of oil. You talk about tar sands and all this. So we're looking between $50 a barrel, $60 a barrel, up to $100 a barrel for some of these other alternate shale oil, heavy sand type extraction that we're able to boost the production in the last few years. So that's going to come offline gradually, and then I think we'll see it level out. So I think the numbers we'll see pretty soon will be fairly soon back to $75, and then maybe 75 to 100 pretty soon after that. If we have a geopolitical zinger in the Middle East, that could be a game changer, and it could go way over 100 soon. But if you look at the cost production issues globally, it can't make a sustained move below 50 for very long. Anyhow, so that's Forecast Year here, just reporting in about the oil situation, and thanks for listening.